Hi, I'm Hunter Hutt, Director of Business Development, and today I'm here with Andrew Torres, CEO and founding partner of Lawrence Park Asset Management. Today we're here to discuss the recent performance as well as portfolio construction and outlook for 2021. The Lawrence Park team rounded out the year with very strong performance, providing our investors with a year-end calendar return of 4.94%. With credit having such a strong month through December, Andrew, do you mind highlighting the main contributors to performance throughout the month?
Yeah, we were quite surprised how strong credit finished the year, particularly in the U.S. So we saw good spread performance from our U.S. positions in particular. Canada also was a positive contributor just because credit finished the month tighter, but not quite at the pace that we saw in the U.S. So all in all, a good return on both sides of the border in December.
Thanks, Andrew. And what are you looking at going into 2021?
Well, there's a couple of themes that we've been setting the portfolio up for into the first half of 2021. I think the first thing and most importantly is you really have to think of credit as perhaps the only game in town. Rate-based duration is really not going to cut it. Rates are starting from such a low point, and as we've seen in the fourth quarter of 2020, we're really coming off the lows, and so rates are backing up, and inflation expectations are backing up. And even though we don't necessarily expect bond yields to double, even if they go up by 10, 20, 30 basis points over the course of the year, that's really going to just generate negative returns in duration-based fixed income. So really investors have to look at credit. That's where we specialize. We have been making some changes to the portfolio. Specifically, we've been moving some of our positioning out the curve. So we've been moving from 2 to 4 or 2 to 5 year bonds into 7, 10, and even 30-year bonds, and at the same time reducing the overall duration of the portfolio. So the broad risk metrics of the portfolio stay the same, but that risk is shifted a little bit further out the curve. And that's because we think as credit continues to tighten, as we see this recovery from the 2020 COVID scare, that we're going to see more of that performance happen in the longer end of the curve and longer dated credit spreads tightening more than short dated.
And so, what tweaks have you made to the portfolio to set up for Q1?
Well, because we saw such a strong finish in the U.S. credit, we've actually reduced our U.S. holdings a little bit and focused more on Canada. As I mentioned, the movement a little bit out the curve, and then we're just tweaking some of our sectors just to make sure that we're positioned where we want to. We really want to focus on sectors that lagged the 2020 rally because perhaps they had higher exposure. They're more traditional, maybe consumer cyclical type exposure that depend on consumer behavior and on traditional hanging out at the malls, that type of thing. We think that activity is going to come back. Travel and leisure is going to come back in 2021. We want to make sure that we're positioned correctly into those types of sectors as we head into the new year.
On behalf of Lawrence Park, we want to thank you for your continued support through 2020. And we very much look forward to continuing to deliver strong risk-adjusted returns through 2021. Thank you and Happy New Year.